Wait, this is your wallet right here. Your bank account. You know what? This is the type of bite that inflation does to our savings, our bank accounts, and all of the money that we hold. That's right. Today, I'm going to talk about inflation. So at the top, it says, what is inflation? On Investopedia, I'll put a link in the description. It says inflation is a decline of purchasing power of a given currency over time. Now, you feel free to read all of this, but I want to highlight the last 3 bullet points on the key takeaways. Those with tangible assets like property or stock commodities may like to see some inflation as it raises the value of their assets, but people holding cash may not like inflation as it erodes the value of their cash holdings. Ideally, the last one, ideally an optimum level of inflation is required to promote spending to a certain extent instead of saving, thereby nurturing economic growth. How inflation tries to slide into your bank account? Yeah, wanting to take a nice bite out of your money? Exactly. I wanted to show you a recent article by MarketWatch, just updated today, March 6th, and the title is, "The U.S. economy is ready to surge again. So is inflation." Inflation has been low for a long time, but that's not stopping Wall Street from worrying. If Wall Street's worrying, should you worry? Well, you shouldn't worry if you're invested in blockchain, and you are. So let's read what others have to worry about. The U.S. added a robust 379,000 jobs in February, and the economy is primed to take off. But improved growth prospects might come with a cost in the short run. In a word, inflation. Make no mistake, inflation is still very low right now, and it has been for the past decade. The blank squelched inflation early last year, and even now, prices are rising less than 2% a year. So, the loss of so many jobs during the pandemic, nearly 10 million, are still missing, and resulting drop in demand is also helping to keep a lid on inflation. It is difficult, if not impossible, to generate sustained inflation at higher inflation expectations when the economy is still so far away from full employment, said Chief Economist Scott Anderson of Bank of the West. That could change in the coming months. How come? Rising oil prices, shortage of raw materials and other key supplies such as lumber and semiconductors, and another round of massive government financial aid to Americans. After falling to near zero last May, the yearly increase in the Consumer Price Index rose to 1.4% in January, and it's expected to keep going up. The CPI, of the government's main tool for tracking the cost of living and determining how much to increase Social Security benefits every year, among other things. Inflation in the U.S. is rising again, but the Consumer Price Index is still low. So, looking at this chart, we can see inflation rising, and we're expecting it to get higher. Economists predict the CPI will increase 0.3% in February, nudging the yearly rate up to as high as 1.7%. The report, which comes out next Wednesday, is the highlight of the week on a light economic calendar. By summer, many economists estimate the cost of living to rise above 2% on a yearly basis and push past the Federal Reserve's 2% target. The evidence of rising prices is mounting. A pair of ISM purchasing managers reports last week, for example, showed that companies are paying sharply higher prices for a wide array of supplies they need to produce goods and services. I want to also point out that home sales, auto sales, and many other consumer and business activities have benefited greatly from rock bottom interest rates, And that's not to mention record stock market gains that some Fed critics tied to the central bank's easy money strategy. Even if Powell is right, the rise of inflation is likely to complicate the path of a U.S. economic recovery if investors continue to harbor doubts. Powell is prepared to let inflation take off and is unlikely to take action in the face of that unless it gets out of control. The problem is we won't know whether it is in or out of control until we let it rip a bit. Meaning they're going to let it go. If it does get out of control, how will we know that it's out of control until we've experienced it out of control? What happens when it goes out of control? It makes people want to invest their money into something deflationary. I want to point out that cryptocurrency is deflationary. And don't take my word for it. CoinGeekMedium.com will have it in the description of the video. What is a deflationary cryptocurrency and its advantages? I will only read this first part at the bottom, but feel free to check the link. A cryptocurrency with a continuously depreciating supply in its blockchain is called a deflationary cryptocurrency. Deflation can be accomplished through burning some percentages of a coin being minted, buyback and burn, buyback and hold, and many others. We know Bitcoin, as it shows in the picture, is a deflationary currency by default, but also fixed supplies of currencies are also deflationary. It says cryptocurrencies such as Bitcoin that are known to have fixed supplies are deflationary by default. Just said that. It provides some unique understanding of the dynamics of inflation versus deflation. And I'll let you read the rest, but I just wanted to point out cryptocurrency is deflationary. Bitcoin is not the only deflationary cryptocurrency, because there is plenty more. We have XLM, who actually burned, how it says right here, down here, it says they, through burning some percentages of the coin being minted, that's XLM. They actually did burn some percentage of their coin that they had, but it wasn't being minted. They had a fixed supply and they burned half of that. So then you have, of course, you have Chainlink. You have, last but not least, I'll say, because there are plenty more, but I want to make sure that I say XRP is deflationary. It is a fixed supply. I don't care if you say it's a lot. XRP has a fixed supply. And if something has a fixed supply, the amount of it can only decrease. The amount of supply can only decrease because there's only a fixed amount. After that, there will be no more. All right. Please like, please subscribe, and I will see you on the next one. Thank you.